Let's pull up ICICI Bank. Our ticker team as well is alerting us, and the intraday graph will tell you a story. That stock, that bank in fact comes out with a set of numbers. Just pull up the intraday chart. Look at that. Look at that. It was holding with a gain of around 1% odd. So we'll wait by. We'll slip into.
Okay, there come the XTQ4 numbers. Okay, that's 2922. Okay, that is not looking like it's a huge surprise. It's come in largely in line with expectations. 2922. But more importantly, we have to wait for what the bank has done in terms of its NPLs as well. That's where we were more worried about. But well, we are still awaiting what the I don't have the NPL number.
The gross NPL number in fact has come in at around 3.8%. That's the big disappointment.
It's a 40 basis point rise in NPLs. ICICI had reported last time that many of their restructured assets were slipping. That's the net NPL number, 1.61. So that's also gone up by about 32 basis points. And the gross NPLs going up by nearly 40 or 38 basis points would be a spot of bother definitely for the bank. We have to see exactly how much are the fresh slippages. We won't get to know that. But on the face of it, this is looking like a troubled set of numbers. One was hoping that they would be able to tide over it, that it would be a one-quarter aberration. But no, this is, you know, when a bank as large as ICICI, it will, okay, there comes 15,000 something was
95 crores, 15,095
so 2,000 crores on increase.
The gross NPA on an absolute basis, which has come in for ICICI Bank this quarter. But like you mentioned, Lata, it was a 28 basis points rise in terms of the gross NPAs last quarter on a sequential basis, and they've worsened it this quarter as well. And the street was hoping that maybe ICICI Bank would not report a worsening in terms of gross NPLs this time round.
About a 15% jump in gross NPLs from about 130 billion to 150 billion. That's what it would work out to, I guess. A little over 15% rise. This is a little eerie because last time as well they reported, I think, a 13% jump in gross in NPLs. Now that is followed up with an almost equal amount of a jump in NPLs. It's a troubled economy and it will show up in the big banks. So here maybe it's yet another instance of you know, restructured assets slipping. Okay, the NIMs have come in at 3.57. I understand.
So that's actually better, Lata, because I'll just wait to see whether it is the consolidated net interest margins which they've reported. I assume it is, because the net interest margins improved last time to 3.46%, and this time around
it's unlikely that domestic NIMs alone would have fallen. It's
so
extremely unlikely when deposit costs are falling.
So it's a consolidated improvement in terms of the net interest margins, which I think is now for the third consecutive quarter straight. So at least that's managed to sustain this time round.
5079 is the NII.
So that's coming at over 5,000 crores, which would easily mean a growth of around 14 to 15 odd % easily in terms of the NII this time. And that is better than, or maybe a little bit within the range that we were working with. But definitely the disappointment has to be the asset quality, despite the fact that the other parameters have managed to be maintained this time round for ICICI Bank.
Okay, I think it's a 30% jump in net NPLs. I think I saw a 6225 number going. 6225, if that is the net NPLs, last quarter was 4773. That works out to a fairly substantial jump. If it is indeed 6225, then the net NPLs have gone up
some
rather
more
sharply.
Details, Lata. The PCR ratio has come down to 58.6% versus 63.5% that they reported the last time round. They have come out with their asset quality statement, whereas the only thing which really stands out is the net loans whose facilities have been restructured stands at a little over 11,000 crores, which is 11,017 crores as compared to 12,052 crores on a sequential basis. So I think that's a little bit of a positive which is coming in. So the net restructured loans.
6255, yes. It is a fairly big jump in net NPLs, about 30% jump.
Yes, 30%.
That is not a very pleasant picture. You know, obviously fresh NPLs have risen, fresh slippages, and therefore that's why the provisioning has not gone up, because first year the provisioning would be about 15%. It may not necessarily mean that the PCR has gone down. We will have to calculate that. Suruchi Jain, the equity research analyst at Morningstar, is joining us. Suruchi, first thoughts, the stock has fallen a goodish bit, I would assume because of the asset quality.
Yes, I think, management did guide last quarter itself that, this quarter will also be bad. But I think we also weren't anticipating it will be nearly as bad as the numbers have actually come out to be. We actually did increase our, NPLs ratio after last quarter's guidance and for the full year. But the numbers still, worse than what we had expected. On the bright side, I think in terms of, NII, it's been broadly in line. And, on the non-interest expense front, it's gone down a little bit. So I think overall bottom line is still looking, decently good. We were expecting a much lower number in terms of the overall profits, thanks to the, asset quality.
Okay, just hold on there. Suruchi, Jignesh Shyal of IDBI Capital Markets is also joining in. Jignesh, your first thoughts? Is it a disappointment? It doesn't compare very well with our own polls.
Well, that's true. I mean, there had been little hype as far as overall numbers had been concerned, but the management had been guiding for a little shaky kind of a quarter, and that's what kind of numbers that they delivered this time. So asset quality had been an issue. Obviously, this restructured book seems okay, but I think we have to see what kind of restructured book has slipped into an NPA. And that addition something that we have to look out for, apart from the fresh additions to the NPAs. That two numbers would be the key to watch out for now.
Okay. Jignesh, they've detailed that the net restructured loan book is at around 11,017 crores, which compares to a little over 12,000 crores in the previous quarter. How would you read that?
No, that is the number which we are okay with, but I'm a little skeptical whether the reduction is absolutely because of some upgradation that has happened or probably slippages that has happened from the restructure to fresh NPAs. So that would be a worry in that case.
Okay. Well, there is a 14% rise year on year in profit, and the profit has crossed 10,000 crore. Well, for what it is worth, at the moment the markets are not concentrating on the profit growth, they are concentrating more on the asset quality. How would you rate the stock now, Jignesh? Do you have a buy, sell, hold?
No, we have a buy rating on the stock, but we always remain cautious on the asset quality part. We have been discussing this with most of our clients. So for now, the ratings and all, we will discuss post the management conference call. But we remain positive overall on the private sector space, and ICICI remains one of our top picks. Okay.
Jignesh, tell me what exactly would you want to hear from the management in terms of their commentary? What were the exact parameters you'll be looking out for?
Look, this time the credit growth had been 14.4% if I'm seeing it right, and it is 3,875 billion. That is the number that I'm
seeing. Yes, you're right. 3,87,000 crores, 14% higher.
Yeah, so that is almost little ahead of what industry average had been and lower than what HDFC had delivered this time. So now what kind of credit growth they are looking forward to, that is one. Okay. And still there is a asset quality, there is a stress in the asset quality pipeline, whether that kind of stress is still happening there or not. Because on margin front and OPEX side as well as other operating income side, we are comfortable with the bank. There won't be much of a worry.
Okay.
Okay. The advances have grown by 14%, as Jignesh was pointing out. I think they've got a decent growth even in their current and savings accounts. The CASA ratio has improved to 45.5% from 44%, which explains why there is a decent improvement in margins. Would you say this is the last of the pain period in terms of bad assets, or you will wait to hear, Jignesh?
No, I think there could be, because the revival in economy doesn't seem like the way the bankers or probably the street were expecting. So if the economic revival is still not in place and that it is taking a little longer, probably we might see 1 or 2 more quarters of stress assets coming up. But it might be lower than what the Q4 had been. That would be my guess for now.
Jignesh, I don't have the other income figures with me offhand, but there was an expectation that the other income could support the profits quite a bit this time because of the exchange gains, possibly from the repatriation that took place during the quarter. Have you managed to look at that parameter? And if in case we adjust for it, maybe the profit would have been a little lower than what the street was working with?
No, there is. I think it says lease and other income is only 757 crores. Yeah. That doesn't look like it's...
the other income component?
The quarter ago was, I think, 539 crores. Q4 of FY15 2015 is 633 crores. And compares with 539 crores. This is lease and other income. I don't think
the other income component in the P&L is what we look out for. But we'll get back to that in a bit. But overall, where do you think that they've met in terms of expectations, Jignesh? And where do you think they've missed the most?
I mean, as other income, what I'm seeing from the P&L is close to 3,496 crores. And our estimates had been close to 3,100 crores. So there had been some balancing coming out from, the repatriation of profit, which would be the number that we will be looking out for. So other income is something that we are okay for. Even OPEX had been pretty okay. There had not been much jump out there.
I have the other income just for the benefit of our viewers. Latha, it's come in at 3,496.3 crores, which compares to 2,976.09 crores.
We've also done very well on treasury income.
Yeah.
I mean, only for the quarter it is up at 726 crore. So there could be
that component as well, which ties in this time round. Yes, so Jignesh, go ahead quickly if you could sum it up.
Yeah, so it's basically, on the operational parameters, OPEX and even the NII had been pretty okay. So although the NIM exact numbers, we don't have it, but we think they would be able to do decently with a stable CASA or improvement in the CASA that we had seen. So the operational parameters have been pretty okay. The only thing that we would be looking out for the stress asset pipeline, which is supposed to be there in the next quarter or two.
Okay. Well, Vaibhav, thanks a lot, Jignesh. One word from Vaibhav Agarwal as well of Angel Broking. Vaibhav, all your comments on the numbers.
Well, clearly the disappointment is on the asset quality. Even at the net NPA level, it's around 500 crores more than what we're building in, and so the provision coverage has also deteriorated. We'll wait for more numbers on, the details of the restructuring and slippages, etc. We were expecting around close to 4,500, including the slippage from the restructuring to NPA as well. So that will be a key number. But, ultimately the key for ICICI Bank is what the management says they expect over the next 2 to 3 quarters. The stock has already underperformed and it's trading at almost 20% discount to Axis. And I think if their guidance for the future can be a little better than what they've done in FY15, then that could actually support the stock price.
All right, point taken. Thank you very much, Vaibhav and Jignesh, for joining us. Well, there you have it. Since ICICI is the biggest contributor to the Bank Nifty, that one is down 1%, largely because of the fall coming in ICICI Bank, which is down 2%. Well, there has been actually some minor outperformance by the PSU banks, but their weight in the Bank Nifty doesn't count for much. Otherwise, Andhra Bank with a 4% jump is actually signaling that perhaps the PSU banks will not be such a pain spot.